Hello everyone, welcome back to my YouTube channel. Today we are discussing the latest developments surrounding the Vietnamese Dong, the global currency market, and the growing international conversation about Vietnam's economic future. Over the last several months, investors, currency watchers, and financial analysts around the world have been paying close attention to Vietnam's economic performance and the movement of the Vietnamese Dong against major international currencies such as the US dollar, euro, Chinese yuan, and Japanese yen. Many people are asking whether the Vietnamese Dong could strengthen further in the coming years, whether Vietnam's economy is entering a new phase of rapid expansion, and whether speculation about a major revaluation of the Dong has any realistic foundation in today's financial environment. In today's report, we will carefully analyze the latest economic indicators, exchange rate trends, trade developments, central bank policies, manufacturing growth, foreign investment flows, and the overall direction of Vietnam's financial system. Over the past year, Vietnam has continued to attract global attention as one of Asia's fastest-growing economies. Major multinational corporations have expanded operations in Vietnam. Global investors have increased manufacturing commitments, and export industries continue to play a critical role in the country's economic growth story. Analysts from international financial institutions have repeatedly highlighted Vietnam as a strategic manufacturing hub in Southeast Asia, especially as global companies diversify supply chains away from overdependence on a single market. This shift has created significant opportunities for Vietnam's economy and has increased international demand for Vietnamese exports, including electronics, textiles, machinery, agricultural products, and technology components. The Vietnamese Dong has remained relatively stable compared to several regional currencies, despite ongoing global economic uncertainty. While some emerging market currencies experience severe volatility due to inflation pressures, interest rate changes, and geopolitical concerns, Vietnam's central banking authorities have maintained a cautious and controlled approach toward monetary management. The State Bank of Vietnam has focused on balancing export competitiveness, inflation control, and currency stability. This approach has helped preserve investor confidence even during periods of international market turbulence. Many online discussions and social media reports continue to promote rumors about a dramatic overnight revaluation of the Vietnamese Dong. Some speculative reports claim that the Dong could suddenly rise to extremely high exchange levels against the US dollar. However, professional economists and international banking experts generally view these claims with caution. In reality, major currency adjustments usually occur gradually over time and are closely connected to economic fundamentals such as productivity growth, foreign reserves, trade balance performance, inflation trends, and central bank policy decisions. Vietnam's government has consistently prioritized economic stability rather than sudden currency shocks that could disrupt exports and investment flows. At the same time, it is important to understand why speculation surrounding the Vietnamese Dong continues to grow. Vietnam's economy has demonstrated strong resilience compared to many developing nations. The country has maintained solid export performance, increasing foreign direct investment, expanding industrial production, and rising international partnerships. These developments naturally lead some investors to believe that the Dong could become stronger in the future if Vietnam continues its long-term growth trajectory. One of the biggest factors supporting optimism around Vietnam's currency outlook is foreign direct investment. International companies from the United States, South Korea, Japan, China, and Europe have continued expanding operations in Vietnam. Large technology manufacturers, automotive suppliers, semiconductor companies, and electronics firms have announced new projects across multiple industrial zones. As global supply chains evolve, Vietnam is increasingly positioned as a strategic manufacturing center. This growing industrial capacity contributes to economic expansion, job creation, export growth, and stronger foreign currency inflows. Another major factor influencing the Vietnamese Dong is trade performance. Vietnam has become one of the world's leading export-driven economies. Strong exports generate foreign exchange earnings that help support currency stability. Vietnam's trade relationships with major economies continue to expand, and free trade agreements have opened additional international opportunities for Vietnamese businesses. The country has participated in several important regional and international trade frameworks that strengthen its integration into global commerce. Increased export activity also helps Vietnam build foreign exchange reserves, which can support monetary stability during periods of external economic pressure. Inflation remains another critical issue in evaluating the future direction of the Vietnamese Dong. Around the world, inflation pressures have challenged central banks and policymakers. Vietnam has attempted to maintain inflation within manageable levels while supporting economic growth. Stable inflation is essential because uncontrolled price increases can weaken consumer purchasing power and damage currency confidence. Investors closely monitor inflation data because it affects interest rates, investment decisions, and exchange rate expectations. Vietnam's authorities have generally aimed for balanced monetary management to avoid excessive economic overheating. Interest rate policy also plays an important role in currency markets. When central banks raise interest rates, they can attract foreign capital seeking higher returns. However, higher rates can also slow economic growth if borrowing becomes too expensive. Vietnam's policymakers must carefully balance these competing priorities. The State Bank of Vietnam continues to monitor global financial conditions, including decisions by the U.S. Federal Reserve and other major central banks. Because the U.S. dollar remains the world's dominant reserve currency, changes in American interest rates often affect emerging market currencies, including the Vietnamese Dong. Another important development is Vietnam's growing digital economy and technology sector. International technology firms continue investing heavily in Vietnamese operations, while domestic startups and innovation centers are expanding rapidly. The country's young workforce, competitive labor costs, and improving infrastructure make Vietnam increasingly attractive for technology production and software development. Economic modernization could strengthen Vietnam's long-term financial position and potentially contribute to greater international confidence in the Dong. Over time, tourism recovery has also contributed positively to Vietnam's economic outlook. Following years of global travel disruptions, Vietnam has seen increasing international tourism activity. Tourism generates valuable foreign currency earnings and supports employment across multiple sectors, including hospitality, transportation, retail, and food services. A stronger tourism sector can improve balance of payments conditions and support economic momentum. Global investors continue analyzing whether Vietnam could eventually move toward a more internationally recognized currency system. While the Dong is not currently considered a major global reserve currency, long-term economic development could gradually increase international use of Vietnam's financial system. However, becoming a major reserve currency typically requires decades of financial market development, deep liquidity, stable institutions, transparent governance, and large-scale international confidence. Analysts generally agree that Vietnam still faces significant challenges before reaching that stage, although the country's progress has attracted considerable attention. In recent financial discussions, some analysts have suggested that Vietnam's growing geopolitical importance may increase international investment interest. As global companies diversify manufacturing operations, Vietnam's strategic location in Southeast Asia gives it an important economic advantage. Improved infrastructure projects, port development, transportation expansion, and energy investments all contribute to Vietnam's economic competitiveness. These projects could help sustain industrial growth and strengthen long-term productivity. Currency markets remain highly sensitive to global economic conditions. Oil prices, commodity markets, geopolitical tensions, trade disputes, and global recession fears can all influence exchange rate movements. The Vietnamese Dong is no exception. Investors should understand that currency valuation is influenced by complex economic relationships rather than simple speculation. While optimism about Vietnam's economy continues growing, exchange rates are ultimately shaped by long-term financial fundamentals and policy decisions. One reason many international observers remain positive about Vietnam's future is the country's demographic profile. Vietnam has a relatively young and increasingly educated workforce compared to several aging economies in the region. This demographic advantage could support industrial productivity and domestic consumption growth for many years. Expanding middle-class income levels may also increase internal economic demand and support broader business expansion. Banking sector modernization remains another important issue. Vietnam has been working to strengthen financial regulation, improve banking stability, and modernize payment systems. International financial institutions often emphasize the importance of strong banking oversight in maintaining long-term economic confidence. Stable banking systems help attract foreign investment and reduce financial risks during economic downturns. Vietnam's real estate sector has also received significant attention from investors. Infrastructure expansion, industrial development, and urbanization have created demand for residential, commercial, and industrial property projects. However, analysts continue monitoring debt risks and property market conditions carefully, as excessive speculation could create financial vulnerabilities if not properly managed. The global semiconductor industry has become another area of interest for Vietnam's economic future. Several technology firms are exploring expanded operations in Southeast Asia, and Vietnam hopes to increase its role in high-tech manufacturing and electronics supply chains. If Vietnam successfully strengthens its position in advanced manufacturing industries, this could support higher value exports and greater economic diversification. International credit agencies and financial organizations continue monitoring Vietnam's economic indicators closely. Credit ratings influence borrowing costs, investor confidence, and international financial access. Positive economic performance can improve sovereign credit outlooks and attract additional foreign capital. However, global economic slowdowns or financial instability could create external pressures even for rapidly growing economies like Vietnam. The strength of the US dollar remains one of the most important factors affecting emerging market currencies. When the dollar strengthens globally, many developing country currencies face downward pressure. Conversely, when the dollar weakens, emerging markets may experience greater capital inflows and improved exchange rate conditions. Therefore, the future path of the Vietnamese Dong is partially connected to broader international currency trends beyond Vietnam's direct control. Some investors continue comparing Vietnam's economic rise to earlier periods of rapid growth seen in countries such as South Korea and China. While there are similarities in export-driven industrialization and manufacturing expansion, every country faces unique structural conditions and development paths. Vietnam's policymakers appear focused on maintaining stable growth rather than pursuing overly aggressive currency appreciation that could harm export competitiveness. Another issue receiving attention is environmental sustainability and energy transition. Vietnam's industrial growth requires reliable energy infrastructure, and the country continues investing in renewable energy projects and power generation capacity. Sustainable economic development may become increasingly important as international investors place greater emphasis on environmental standards and long-term climate considerations. In financial markets, rumors often spread quickly through social media platforms and online forums. Claims about immediate currency revaluations can generate excitement among speculative investors, But experienced economists generally advise caution when evaluating such reports. Major currency adjustments typically occur through gradual market developments and official monetary policies rather than sudden overnight transformations. Investors should always distinguish between verified economic data and unsupported speculation. Vietnam's export competitiveness remains heavily connected to exchange rate policy. A currency that becomes too strong too quickly could make exports more expensive in international markets. This is one reason many export-driven economies carefully manage currency stability rather than allowing extreme appreciation. Policymakers often seek balanced exchange rates that support both investor confidence and manufacturing competitiveness. Recent economic reports have shown continued resilience in several Vietnamese industries despite challenging global conditions. Manufacturing output, electronics exports, and industrial investment remain key pillars of growth. International companies continue viewing Vietnam as an attractive destination for supply chain diversification, particularly in sectors related to consumer electronics and industrial manufacturing. At the same time, challenges remain. Global economic slowdowns can reduce export demand, rising debt levels can create financial pressure, and international geopolitical tensions can disrupt trade patterns. Vietnam must continue strengthening infrastructure, education, technological capabilities, and financial regulation to sustain long-term growth momentum. Currency stability ultimately depends on maintaining broad economic confidence across domestic and international markets. Financial analysts also emphasize the importance of foreign exchange reserves. Countries with stronger reserves are generally better positioned to stabilize currencies during periods of market volatility. Vietnam has worked to strengthen reserve levels over time, providing additional flexibility for monetary management. Strong reserves can help reduce investor concerns during external economic shocks. Another major trend influencing Vietnam's future is regional economic integration. Southeast Asia continues becoming an increasingly important global economic region. Trade cooperation, infrastructure connectivity, and cross-border investment projects could strengthen Vietnam's long-term economic role within the region. Expanding regional partnerships may also create additional opportunities for Vietnamese businesses and exporters. As international attention toward Vietnam continues growing, many global investors are carefully studying the country's long-term economic potential. Manufacturing growth, infrastructure investment, trade expansion, tourism recovery, digital transformation, and strategic geopolitical positioning all contribute to optimism surrounding Vietnam's future. However, experienced financial professionals continue emphasizing that sustainable currency strength requires disciplined policy management and long-term economic development rather than speculative hype. For viewers following Vietnamese Dong discussions online, it is important to rely on credible economic analysis rather than emotional speculation. Currency markets are influenced by many interconnected variables, including central bank decisions, inflation rates, global trade conditions, foreign investment flows, and geopolitical developments. Sudden rumors should always be verified against official financial data and credible institutional analysis. Vietnam's government appears focused on gradual modernization, economic stability, and continued integration into global markets. This strategy has helped the country attract international investment while maintaining relatively stable growth. Although dramatic overnight revaluation stories continue circulating online, most economists believe Vietnam's long-term economic progress is more likely to produce gradual financial strengthening over time rather than sudden currency shocks. The coming years will likely remain extremely important for Vietnam's economic future. Global supply chain restructuring, technology investment, infrastructure modernization, energy development, and international trade relationships could all shape the country's financial trajectory. Investors and analysts around the world We'll continue monitoring Vietnam closely as one of Asia's most dynamic emerging economies. As always, viewers should remember that currency investment carries significant risks. Exchange rates can fluctuate rapidly due to global market conditions, political developments, and unexpected economic events. No financial outcome is guaranteed, and all investment decisions should be made carefully with proper research and risk management considerations. Professional financial advice is always important. Before making major investment decisions involving foreign currencies or speculative markets, despite the uncertainties, Vietnam's economic story continues attracting international interest because of its strong manufacturing base, expanding export sector, growing foreign investment, and strategic economic positioning. Whether the Vietnamese Dong experiences gradual strengthening in the future will depend largely on sustained economic performance, responsible monetary policy, and continued international confidence in Vietnam's development path. For now, the global financial community continues watching Vietnam very closely. Investors are analyzing export numbers, inflation trends, foreign investment announcements, infrastructure projects, central bank policies, and broader global market conditions for signals about the future direction of the Vietnamese Dong. While speculation about dramatic revaluation remains controversial, there is little doubt that Vietnam has become one of the most closely watched emerging economies in Asia. Thank you everyone for watching today's latest Vietnamese Dong update and economic analysis. If you enjoy detailed financial news reports covering the Vietnamese Dong, global currency markets, international investment trends, and economic developments from around the world, make sure to stay connected for more updates as new information becomes available. The international currency market continues evolving every day, and Vietnam's economic journey will remain one of the most important stories to watch in the years ahead.